Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Katie, you know me. I like numbers. I like data. So here's some not so surprising data around race and asset management. Not surprising if you've been paying any attention to what we talk about here on Bloomberg Businessweek. I found this article in the Harvard Business Review, and it says that back in 2021, this is research from Josh Lerner at Harvard Business School, of all assets owned, only 1.4% were managed by minority-owned firms. And back in 2021, minorities made up more than 40% of the population. As I mentioned, Josh Lerner at Harvard Business School, he's got a ton of research around this. There's a huge disparity between who has and who manages these assets based on what our population in the United States actually looks like. Somebody who's trying to address that is Calvin Butts Jr. He's co-founder and general partner at East Chop Capital. He joins us here in the Bloomberg Interactive Brokers studio. Good to have you with us, Calvin. How are you?
I'm doing well. Thanks for having me.
Yeah, thanks so much for having us. I want to get to what you're doing at East Chop, but we'd be remiss if we didn't. And look, you know, one of the benefits of being in private equity is you don't necessarily have to mark to market every day and understand, you know, the value of how your assets have changed. But you see a day like this in the equity markets. What do you think?
Well, I mean, it's September, right? I mean, S&P is normally down in September. Obviously, you know, still looking forward to the job report later this week. So there's a lot going on. I mean, it's the first of the month. There's 4 months left in the year. It's just that time of year. It's that time of year for a lot of volatility.
Seasonality.
Sell-off makes sense.
Talking about seasonality.
Yeah, and it seems like no one is surprised that we woke up this morning and stocks were just screaming lower.
Hey, I want to get to just a headline crossing the Bloomberg terminal. Calvin, forgive us. This is what happens. Live news. NVIDIA gets a Department of Justice subpoena in escalating antitrust investigation. The U.S. Justice Department sent subpoenas to NVIDIA and other companies as it seeks evidence that the chipmaker violated antitrust laws. It's an escalation of its investigation into the dominant AI computing provider. Taking a look at shares of NVIDIA in the after hours as we speak. Remember, shares were down significantly today, more than 9% today, Katie, I believe, now down 1.4%.
Yeah, and of course, as you mentioned, Bloomberg had previously reported on this in June that investigators have been contacting NVIDIA and other tech companies to gather information here. According to people familiar with the matter that have spoken to Bloomberg, the DOJ's San Francisco office is taking the lead running the inquiry. We know that antitrust concerns for a lot of these big tech names have been near the top of the list of things to worry about. It definitely feels like that has been the mood music out there, and it's interesting to see this scoop now in crossing the Bloomberg that NVIDIA is getting that DOJ subpoena in that escalating antitrust investigation.
Once again, shares moving lower in the after hours, down 1.5%, taken in total today. If you include after hours, Katie, shares down close to 11%.
Yeah, it's pretty brutal.
It is brutal. Hey, let's get back to Calvin Butts. He's been extremely patient, waiting for us as we do breaking news here. That's what happens on Bloomberg Businessweek. Let's talk a little bit about the assets over at East Chop Capital, because you guys are doing some really interesting stuff. When we talk about real estate private equity, you're not just doing real estate, but you're also doing art investing. Take me through the assets that you have under management and where you're looking to grow.
Yeah, so East Chop Capital started in 2018. We have two major verticals. The first one's real estate, and the second one's angel investing. From a real estate perspective, we operate the largest minority-owned luxury vacation home portfolio right now. We own and operate assets as far north as Martha's Vineyard, as far south as Orlando, and we have homes being built in Orlando, Florida, as well as Cinnamon Shore, Texas, and we have homes in Gatlinburg, Tennessee, etc.
When you say luxury, how do you define that?
So we have anywhere from 4 to 12 bedroom homes that are completely, renovated with in-room master suites, opportunities for multiple families to come and rent and stay. We have homes with indoor bowling alleys.
So you
gyms.
own and manage the homes?
Correct.
Rent them out through a platform such as Airbnb?
Airbnb, Verbo,
Okay.
WeNeedVation.com, a lot of different platforms.
12 bedrooms.
Yes.
That is, that's luxury. And I mean, we talk about the luxury market all the time when it comes to, accessories, handbags, shoes, etc. What does the luxury market in real estate rentals look like right now? We know that the housing market in general has been pretty frozen. You think about the effect of higher interest rates, that structural undersupply of housing. When it comes to luxury real estate. What's the vibe there?
So I think the vibe is, you have to make sure you have the right amenities for folks. And I think it's not going to be if folks are not going to travel, it's just how they're going to travel and the difference in how they travel. People are traveling with more families, they're bringing their in-laws. So you need more space, more rooms, more amenities, more living spaces, larger pools, and et cetera. So we've been able to provide that across our portfolio.
What about the art investing side of this?
Well, so I'm a personal investor in art, so I've been collecting art for about 5 years now. We've gotten our investors from East Side Capital into such things like Broadway plays and other investments. But the art side is really much me personally. Been just trying to give back, and I have a long-term vision of donating my art collection to Hampton University, and helping solidify one of the historic Black colleges in their museum and art collecting.
Okay, so it's not just real estate and art. You're also thinking about sports, media, beverage. You mentioned entertainment too.
That's absolutely correct. So we have different verticals that we've invested in. So from a sports perspective, we've invested in a MLS Next Pro team in Connecticut. We're very excited about that. That's the minor league version of soccer. And so we're looking forward to being a part of that. Andre Swatson and his team has put together a dynamic opportunity for our investors to be a part of a minor league team and hopefully lead to MLS expansion over the course of time with the plans there in that league. From a spirits perspective, we're the largest minority investors in Uncle Nearest, which is one of the fastest growing whiskey brands in the world right now. So we're very excited to be a part of that group. I was just on the phone with Fawn Weaver earlier today. She's got some more exciting new things happening, and things are moving pretty quickly in that space as well.
And I want to talk a little bit more about your investor base, because
Sure.
reading through the details, so you closed your first fund in December 2020 at $4 million. You recently closed your second fund at $11 million in April 2024. Just give us more details on who is investing in your funds.
Sure. So we have about 250 investors across the real estate and the angel investing. About 90% of them are African American or folks of color, and we have about 23% women. Our first fund, we went door to door, friends, family, fraternity, brothers and sisters, and kind of going around and just kind of going door to door. And the second fund, because of word of mouth, because of track record and the success of the real estate, it was easier to raise 4x return, in almost a third of the time.
Wow. You talked about the composition of your investors.
Mm-hmm.
I started out our segment by talking about the lack of diversity when it comes to money management, a small fraction, 1.4%, again, going back to that Harvard Business School research by Professor Josh Lerner there. How does that change? How did you change that? How have you changed that?
Well, I mean, we need to see more folks like myself actually managing assets. And so our goal is to grow our AUM to $1 billion over time with different verticals, sports, media, real estate. And then from that, to bring folks along with us, that's part of closing the wealth gap. Because we want to educate folks and find all the accredited investors that look like us and give them opportunity to invest in private markets where the returns are greater.
How do you find those accredited investors? And a reminder, those are people with over $1 million in net worth,
$1 million in net worth,
their primary home?
Not including primary residence, $200K single income, $300K combined with your spouse or partner. It's really been word of mouth for us right now. We've been speaking at different events and doing our own road show. But really, it's about education, right? So we want to educate folks on their status. And once they understand that they are accredited investors and they have access to private deal flow and private markets, it's an excitement and a need to be educated and learn how to get into those deals.
So I have to imagine that, for some of those accredited investors that you're linking up with, that maybe this is their first time investing in a VC fund. And I mean, talk us through that. What is that education process look like? It's a lot different, I would imagine, than just clicking buy on an index tracking ETF, for example.
It's been great. I mean, we've had a chance to really educate folks from A to Z, right? So not only identifying their status and what they're able to invest in, but also educating them on how to evaluate deal flow. What to look for, what questions to ask, how to set up, capital calls and how to commit to wires. And I mean, we really have done it from start to finish and kind of have a hand-holding approach for our first-time investors. Now, we have other investors who have a little more savvier and have done different private market stuff on their own. But for the majority of our investors, this was their first investment into a private equity fund, and then now into other ventures that we've got them in via our SPVs, our special purpose vehicles.
You say that you are looking to grow assets into $1 billion.
Yes.
What's the timeline for that?
Well, we want to do it in the next 3 to 5 years. I mean, we probably have a $250 million real estate pipeline that we're excited to kind of roll out over the next couple months that we'll be introducing to our investors into the world. But then also, we continue to seek, deal flow. A lot of unique private market deal flow is starting to flow down to the community level. And we want to be one of those firms that curate that deal flow for our investor base.
I want to get right back to Calvin Butts Jr. He's co-founder and general partner of East Chop Capital. They got about $50 million in assets under management. The goal, growing that to $1 billion in the next few years of assets under management. They do private equity. They got sports, entertainment, media, investments, a lot of real estate. Calvin's here in our Bloomberg Interactive Brokers studio. A lot of the real estate that you have acquired over the last few years has been during a, uncharacteristically in recent years, high interest rate environment. How did you finance those?
So we did very well pre-COVID. We bought a lot of our real estate and we held it during COVID, managed it very well. And then recently we've been paying cash for houses because of the current interest rate environment. The goal is to watch the rates drop and then refinance those out and have favorable lending terms and then give money back to our investors as well.
And talk to us about the geography a little bit. I mean, we talked a little bit about the luxury market, but I also see, looking through your talking points, this focus on B-plus cities that are growing. Talk to us about who falls into that category when you look around the map.
Sure. So from the luxury vacation home perspective, we look at lakes, beaches, mountain resorts. For the rest of the real estate perspective, yes, we love fast-growing B-plus cities. Columbus, Ohio, Austin, Texas, Nashville. We're very excited to kind of be a part of their growth. You see these teams that are, starting to look at, additional sports franchises, look at their urban Airbnb markets expanding, and just the overall entertainment of what's happening in these local cities. We want to be a part of that growth.
Your investors are unique in the sense that they don't necessarily look like a lot of other private equity investors. Mm-hmm. You have more than 200 investors. 90% of them are Black. 23% of them are women. Do you think you'll be able to keep that demographic data as you grow?
Well, no, I mean, we're open to all investment. I mean, that's just where we focused on. That's been our relationship. That's been our network. As we grow, I mean, we're excited to welcome capital, from all different walks of life, as long as it's good money, and, folks are understanding what we're trying to accomplish and they have the same values as us. We'll be excited for that. But it'd be great to continue to get Black dollars into the private market space. Where
do you see other areas for growth? We mentioned a lot of the different assets that you own right now, the types that you have your eye on. What's interesting to you right now?
I'd say, sports is great. Ownership, you're starting to see a lot of the professional teams open up little packets or pieces of ownership. We'd like to be a part of those in all the major cities, and even some of the up and coming, minor league teams that are growing kind of start there and build into owning a professional team. One day, media. We've gotten a lot of interest from our investor base around Broadway plays. We were in Alicia Keys' Hell's Kitchen, did really well with that, and we've got some other opportunities coming in the pipeline. And then obviously real estate. Looking at supporting our HBCUs with housing and some of the needs that are there. We want to address those gaps and make money doing it.
And keeping the focus on the future, before we let you go, I want to talk a little bit more about the investor base. So the goal is to build the AUM to $1 billion. Right now you have 200 plus investors. What do you think your sweet spot is in terms of investors? Are you looking for ultra high net worth individuals eventually? Are you happy with just, accredited investors? Like, where do you see that going when it comes to your investor makeup?
So I think it's a blend. I think our sweet spot is folks who are making their first or second private market investment, who have just identified themselves as accredited investors, who want to get into wealth building, want to get a little more aggressive around, building wealth for themselves and their family. But we also have great deal flow. So we're open to family offices and other institutions that may want to support us in our ventures. We are doing real estate, which is a hard asset, which traditionally does well. And luxury real estate has been proven to be strong over the course of the years. Well,
Calvin, so enjoyed this conversation. Really fascinating perspective on the private markets, on, of course, private equity investing. That is Calvin Butts Jr. He is the co-founder and general partner over at East Chop Capital.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek, and 30 years ago, Katie, where were you?
I was alive.
Okay.
Yeah. I don't have memories from that time, but I was definitely alive.
All right, you were there.
Yeah, where were you?
30 years ago.
How old are you, 50?
Yeah. Okay. She's funny, isn't she, guys? Well, well, 30 years ago, Kodak spun off Eastman Chemical Company. Today, Eastman is nearly a $12 billion market cap company. It focuses less on the chemicals and more on advanced materials. The company counts other companies like Pepsi, LVMH, Patagonia, Procter & Gamble, and others as customers. We've got with us Mark Costa, CEO of Eastman. He joins us here in the Bloomberg Interactive Brokers studio. I would say Eastman Kodak was a household name for an entire generation of people. Eastman, these days, not so much, given who your customers are. Explain how we would interact with Eastman each and every day.
Absolutely. So, long history of innovation. We've been around for 100 years as part of Kodak, and then we're spun off, as you noted, 30 years ago, come up tomorrow morning. And we started out making all the materials for Kodak, and then we branched out dramatically into a variety of advanced materials. And they're in every aspect of your life. So we are famous for our Triton, which is a BPA-free plastic that replaces polycarbonate. So anything, whether it's Cuisinart or a reusable water bottle or anything else that says BPA free in the store, and if it's really clear and hard, the top of a Yeti container, et cetera, that's Eastman Triton. So we have a wide range of products like that go into cosmetic, bottles and lipstick holders and sunglasses or eyewear you're wearing is made out of our biopolymer. That's a cellulosic derivative.
Well, look at that. I didn't even know I was wearing.
Yeah, we're the dominant player in the world in the safety windows, for the laminate for safety windows in cars and buildings, for aftermarket films, additives into coatings and paints and personal care. So a broad spectrum of markets. We really represent the manufacturing, GDP of the world, also very global.
So how does your business fit into the macroeconomic cycle? Because it's not as straightforward as, clothes, for example, and people buy less clothes when inflation is high. I mean, talk us through sort of the daisy chain there.
Yeah, absolutely. So we touch a wide spectrum of end markets. Our three biggest end markets and our most profitable end markets are automotive, building construction, and consumer durables, appliances, TVs, things like that. But we also have a huge presence in personal care, in ag, and a variety of other end markets. So we really touch a wide spectrum and very global in our footprint between here, Europe, and China. So we do touch all the end markets, but the ones that we can see and really feel the pressure on right now is those consumer discretionary markets that are interest affected, right? Auto, homes, durables, and you can see that demand for the world we live in have been in a recession for 2 years, right? It started, in May of 2022. Taylor Swift is a good place to be, but making things right now when everyone wants to vacation, it gets a lot, tougher road to walk.
But Katie brings up a really good point about your perch playing in so many different areas. Would you say the consumer globally or here in the U.S. is weaker now than it's been at any point in the last few years?
For sure. I mean, we're way off of the peak of 21, 22, but that was also somewhat stimulated. But we're still below 2019 on a pre-COVID basis in most of these end markets. I mean, you've got existing home sales.
Meaning we're worse off than pre-19?
Absolutely.
Okay.
So, you think about existing home sales, which is 90% of market transactions, right?
Well, it's a different interest rate environment.
Yeah, I mean,
for
it's
sure.
a 28-year low.
Yeah. So I'm curious, when we think about sort of the makers of things right now, you think about price and volume. And for a while, it felt like, companies were doing okay because they could just increase the prices and sort of protect margins and revenue that way. Now it feels like, especially looking at this past earnings cycle, we've entered a different point where you can't rely on those price increases, that you have to rely now on volume.
Right.
Where are you in that? How are you thinking about that?
Yeah, it's a great question. So what we're seeing this year is pretty meaningful volume growth. So our EPS will be up 20% relative to last year, and that is on volume. But it's really a lack of destocking than it is in markets are growing. But the destocking last year through the whole materials chain was huge, right? And you have in markets at a low level for a really long time, and that's what I think people are missing is the area under the curve of over 2 years of low demand. There's a lot of demand that's not been served, whether it's cars, appliances, whatever else. So at some point for us in particular, I think we're really levered to interest rates coming off and that market recovering because you've just had so much demand be low for so long, right? 09 or 2020 was bad, but it was bad for 3 quarters or 2 quarters. We've now lapped into the 9th quarter where demand's off.
So where does it look like we're going?
Well, I think as you go to next year, to your point, you're not increasing pricing this year relative to last year, and certainly not really going to be increasing pricing next year unless demand gets a lot stronger, and then pricing power will come with it. So, we look at the world of trying to keep our pricing, our variable margins sort of constant, hold the price gains that we've had, but get demand recovery, right? And you have to get it two ways. One, you want markets to get better, which I think will happen if the Fed starts lowering rates. But the other, you got to create your own growth. So for us, a big point of our emphasis and a lot of our growth next year as Eastman will come from the circular economy. So we've built the world's largest circular molecular recycling facility to take waste polyester plastic and use it instead of oil to create all the polymers that we make. And that allows us to sort of disconnect from oil, take waste that is literally going to landfill that has no alternative use, and recycle it back in and do this infinitely with the kind of technology that we've deployed.
Mark Costa, thanks for swinging by.
Absolutely.
The Bloomberg Interactive Broker Studio. Really appreciate it. He's CEO of Eastman